Thank you so much for joining us. Thank God it's Friday. This is Business Nigeria, reaching you live from Abuja studios. Now, federal government sustainable economic opportunities, livestock-led growth. That's one of our top stories this afternoon. Nigeria's crude oil trades above $70 a barrel. Tops FG's budget 2026 benchmark. Netflix bows out of Warner Bros. Paramount Skydance wins bid. Well, today on the show, we will stay again with a breakdown of decisions and, of course, the signals from the 304th Monetary Policy Committee meeting of the Central Bank of Nigeria, where policymakers and those at that meeting, of course, slashed the monetary policy rate to 26.5%, a significant shift after months of aggressive tightening. Well, is this the long-awaited pivotal towards easing? Is inflation finally cooling enough? What does this signal for businesses, investors, the Naira? We'll unpack the implications of the decisions and what it means for the broader economy as we move on the show today. But let's bring you up with some stories making headlines before we get talking. The executive chairman of the Nigerian Revenue Service, Dr. Zach Adedeji, has unveiled plans to generate about 40.7 trillion naira from collections, taxes, and royalties and other minerals in the 2026 fiscal year amidst tax reforms. The NRS boss said this story in the 2025 budget performance, 2026 budget defense, held at the instance of the House of Representatives Committee on Appropriation, along with Presidential Economic Team of the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, and the Minister of Budget and National Planning, Senator Atiku Bagudu, in Abuja. Now, Dr. Adedeji said for the year 2025, the revenue target for the service was 25.2 trillion naira, an increase of 3.5 trillion naira compared to the actual revenue collected in 2024 fiscal year. He said the service succeeded in the 2025 target by collecting 28.23 trillion naira revenue. On his part, Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, said the administration of President Bola Tinubu that there was heavy reliance on ways and means that was before his administration and financing to cover large fiscal deficits, while NNPC funded petroleum subsidy through recovery arrangement. Well, let's move to our discussions because it's going to be a very interesting one now. Nigeria's monetary policy concluded its 304th meeting. That was on Tuesday. Now, the committee reduced the MPC rate, as monetary policy rate, MPR, by 50 basis points to 26.5%, while retaining cash reserve ratio at 45% for commercial banks, 16% for merchant banks. The governor of the Apex Bank also commended President Bola Tinubu's Executive Order 9, which directs oil and gas revenues into the Federation account. My colleague Uloma Oyemachi reports. All right, then we'll still try to bring you that report. But join me really to understand the decision after that two-day meeting and, of course, discuss the implications for businesses and households. Well, I have the director himself at the Monetary Policy Department of the Central Bank of Nigeria, Dr. Victor Obo. He joins me live in the studio. Thank you so much. Good afternoon, Dr. Obo. It's really good to see you.
Thank you, Tolu, and welcome to Abuja. I mean, we'll be doing this, virtually, but it's fine to see you here physically.
Thank you so much.
It's a pleasure to be here.
Thank you very much.
Thank you.
So finally, you have decided to go to the other side of the curve, if I'm allowed to use that term. We are now moving the other way. We are gradual easing on monetary policy rates. Now, what will you say are the fundamentals that, prompted this decision?
Thank you once again. As has always been with the Monetary Policy Committee of the Central Bank of Nigeria, key rate decisions and parameters are underlined by data, evidence that are presented and rigorously, analyzed, provide clear guidance on what decisions to take. And for the 304th Monetary Policy Committee meeting that was concluded on Tuesday, the analysis from both the global and domestic side point to the fact that this inflation trajectory would continue. And for achieving 11 consecutive months of disinflation, and then inflation coming down, remember, from 34.6% in November 2024, and then we are moving down to 15.1% in January, provide some headroom for marginal easing. Again, marginal easing in tandem with what the data has provided. Again, the marginal aspect of the easing point to the fact that the MPC is cautious and very careful to ensure that the disinflationary trend is not reversed, and then to avoid the loss in the gains that have already been, achieved.
So if we have achieved a bit of stability, inflation is moderating, there are beautiful projections for Nigeria's economy moving on, many would say, or many analysts have said, well, we could have seen a more bold step or a more significant cut, maybe to like 100 basis points, 150 basis points, or 200 basis points. When are we likely to see that, and what are those fundamentals still putting us where we are?
Thank you. So what we have done, what we have achieved as a country, and when I say we, I mean both the fiscal and the monetary authorities, is to be able to, enter a regime of macroeconomic stability. But then you need to consolidate on that. And when you look at those specific macro indicators, no economy will be very comfortable at double-digit regime, inflation regime. We are still at 15.1. And as the governor will continue to have, the objective is to bring inflation down to single-digit level. The last time we saw headline inflation in single-digit was around 2015, about 11 years ago. And the objective of this Monetary Policy Committee is to ensure that our journey to single-digit territory is achieved. And so if you look at that, vis-a-vis some upside risk within the year, including election spending, geopolitical tension, it just advises that you remain cautious, in your approach. And so as we move further, and as projections begin to unravel, and we see some, continuous moderation, the MPC will be better guided on the decisions to be taken.
The standing facilities corridors around the MPR is still at plus 50 and minus 450 basis points.
That's right.
Some are concerned also about this, that this might not be too good for the banks.
According to our data again,
yes,
the bank is systemically liquid. System liquidity in the banking system, in the banks, is sufficient to run the banks. I tell you, the corridors we are talking about, the SDF and the SLF, the standing deposit and the standing lending facilities are there. And we see the data very clearly. There's a lot of activities at the standing deposit facility, at the window, which shows that the banking system is excessively liquid. If you look at the liquidity ratio, it's very high. From 30, we're around 59, thereabout. So it shows that the bank is excessively liquid. And we believe that keeping the corridor at plus 50 and minus 450 is quite good for them. It doesn't harm anything. By the way, the reduction of the NPR by 50 basis points also reduces the lending rate at which the banks will borrow from the central bank by 50 basis points the same way. So that shows that there's also a leeway for those banks that would want to borrow from the central bank to do that at reduced rate.
Now, staying with the banks, we also saw in that report that the communique as presented by the central bank governor stating that 20 of the 33 banks operating in Nigeria have met the recapitalization demands and all of it. I'd also like you to speak to that and make us understand what it means generally for our financial system.
Yes. So what it means is that the recapitalization exercise itself is an upgrade, it's an enhancement. Nothing was wrong with the banking system before the idea came. The bank just decided to make sure that to be able to finance the $1 trillion economy, as projected by Mr. President, there's need for banks to raise their minimum capital. So ab initio, our banks were sound, and stable, and resilient. But we want an upgrade to be able to compete with other international banks and to increase their capital. So that was what happened. Now the target is in March 31st, 2026. And what the governor has said is that out of the total number of commercial banks we have and merchant banks that we have, already 20 have met the minimum requirement. But that is not the end of the story. 33 of them have gone to raise capital from the market. And that was as of Tuesday. Maybe by now, the recent data may have shown...
Might even change.
Yes, additional banks that may have made the requirement. So we are very much on course, and a lot is going on, and we've seen a lot of capital inflow into the banking system. So the bank will become very stronger and more resilient and more robust to be able to contribute adequately to economic activities.
Because that's where everyone is looking at.
Exactly.
They are seeing the ways they can get to learn, reasonably from the apex, from the commercial banks.
Yeah,
because that argument is there that at the moment today, if you're borrowing money or taking a loan from a bank, it depends on the kind of business you really want to do because of the interest rates.
So what's going to happen? One major gain of this consolidation, this recapitalization, is that with so much capital that they are going to raise, there's going to be competitiveness among banks. And because of that, a lot of banks will want to lend out money to the real sector and then jumpstart growth.
That's really a good one. Let's talk about Forex a little bit around the foreign exchange market. We've seen stability in that space. And I think recently you also had the BDC guys have been brought in again into the, of course, with proper monitoring. I saw that circular from the Apex Bank. So tell us about this stability. Some are saying that we could even get to maybe 1,200 as we move on. Some say 1,250. Or do you think it is?
So everybody must have to believe that the reforms initiated by the governor, in that FX window has come to stay. And what we have seen is that the exchange rate, the market, is operating on its own with little or no intervention from the central bank. So what has happened there is that a lot of reforms have gone in, transparency, confidence building, credibility. So that has attracted, investors, capital inflows into the system. So there is enough liquidity in the foreign exchange market, which has helped to stabilize rates. Tolu, for the first time in many years, you saw in December, January festive period, there used to be some pressure on the exchange rate.
Yes.
We didn't have that.
It didn't happen.
Everybody. Can you believe now, Tolu, that wherever you go, all over the world, you use your Naira card. You use your Naira card outside the shores of this country. You trade, you pay your hotel bills, you do whatever you're going to do. Students have their Naira accounts and they pay their bills offshore, abroad with their Naira card. That is where we are. This has not happened in decades in this country. And I will assure you that because of the transparency, the credibility, confidence had returned, and investors are finding Nigeria as one of the best investment destinations. And so, look at our reserves.
Over 50 billion.
Over 50 billion.
US dollars.
Yes.
We've not had that in 13 years.
13 years. So that is confidence. That is confidence. And that is what investors are seeing. So we have that reserve position that is robust enough to finance close to 10 months of import cover.
Yeah.
Yes. The minimum requirement by IMF is 3 months. We are talking about 10 months. So this got to show that what we are seeing in the FX market is real and is sustainable.
Yes, I wanted to ask sustainability, but you already hit that already, Dr. Obo. So it is sustainable.
Yes.
Despite the worries of spending and all of that.
Yes.
Governor has been concerned about that, talking about spending, penultimate to an election year.
Yes.
You know, everyone is concerned.
Yes.
Now election has been revised to even January. So some believe that these spendings might start.
Yeah. So yes, these are risks. And the governor alluded to that.
Yes,
these are upside risks to inflation because of increased election spending. And it's not a new thing. We know in the central bank that every 4 years there's an election cycle. And we also know that during the pre-election year and the election year, there are heightened spendings related to election. They are not new. What is new now is that the central bank is more prepared than ever before. We have factored in those risks into our arsenal, into our preparation. So as I speak to you, the bank has, under the leadership of the governor, has set up some form of framework on how to address those risks that are related to election. Politicians will have to spend during elections. Yes. But the bank has a duty to ensure that any risk, that will face inflation and other macro indicators, we have to mitigate it. So a good framework is in place to see that all those risks are mitigated and does not unnecessarily heighten or exert undue pressure on exchange rates.
Let's look at global concerns, because for me, Nigeria is not insulated. When all of these developments happen internationally, we always get the backlash one way or the other. Crude oil prices, commodity prices, and all of that. So if you look at all of this, do you see it affecting also our prospects for this year, 2026, projections?
Yes, so we've seen projections, and the MPC also take into account analysis from the global environment. So we've seen from the projections of the WEO, the World Economic Outlook, which usually comes out, the update came out in January. What is showing is that global growth is expected to improve even this year. Projections have been revised, better than what we saw in October last year. So overall, we're going to see global growth improving. Now, the issues are around geopolitical tensions, which might disrupt supply chain, and then the issue of heightened geopolitical fragmentation, trade, tariff, and then the issues around military, tension around the Middle East. Again, those ones have two sides to the coin. Just as you just mentioned, the oil price has just increased.
Above $70.
Yes.
That looks good.
And
with
it's not unrelated with the tension, between the U.S. and Iran. Yes. So these are the issues. But why we don't celebrate those tensions, why those tensions, heighten, oil price will rise, and that will provide some comfort to fiscal, revenue that accrues to Nigeria. So all in all, after some balance, revision and assessment of risk, what we find is that tension will continue to be there. But our safeguards, our reserve position is strong enough to be able to absorb any shock from the global dimension.
It's really a serious one. We've also seen stability in the price of petroleum products, improved food supply conditions, of course, and especially staples. And these outcomes have indicated prior tightening as we continue to anchor more expectations. Now, I would like you to speak on, I asked off camera then that, are we going to continue to see this? The next meeting is in May.
May.
And we have March, we have April to see figures from all of those months, the data that would determine what happens in May. So if it's business as usual, what should we be expecting?
So Tolu, you've answered yourself. And the answer you have provided, and you have helped me to answer yourself, is the fact that we're going to await the outcome of the data in March and in April. And that will guide members of the committee on what to do. We are in a world of uncertainties from the global side, but we are hopeful that all things being equal, inflation will be on the downward trajectory. And if there is enough headroom for a moderation, why not? If the risks are so perverse that will reverse the gains, why not hold? If the risks are so heightened and are already showing some adverse impact, why not a hike? So the three options are open to the committee, depending on available data.
Manufacturers are groaning, Dr. Obo. If they hear of that hike, they would not be happy. You know the LCCI.
So I'm not saying there will be a hike.
At all.
Anyway.
They've all, no, you didn't say that.
Yes.
They've all commended the CBN for this decline. Because, you know, I speak to members of MAN and what they keep talking about is this issue of interest rates. So let's talk about, you know, some will say, oh, development finance is also a role of CBN. I know you are a monetary policy person, but what more should also sort of support, let me ask now, support should maybe Nigerians been expecting, or do we expect from the monetary side to support the fiscal side more moving on in 2020? We know there's an handshake, and that handshake is commendable, but we want more. So what should we be expecting as we move in 2026?
Strengthened monetary fiscal policy coordination. There will be more coordination. There will be enhanced coordination of macroeconomic framework, working together, trying to see that areas of trade-off are minimized. One economy, whether you are in the fiscal or you are in the monetary, we are all working towards one economy. The Central Bank of Nigeria remains committed to providing and strengthening macroeconomic stability. Tolu, you know that sustainable growth cannot occur in a high inflationary environment. It cannot. You need investors to come, and put in their capital into the economy. No investor will come when your inflation rate is very high. So whatever the central bank is doing is to ensure that that stability is sustained enough to be able to allow investment to grow. Farmers, manufacturers, they wouldn't want to, buy their inputs at a very high price. We understand, but first thing first, and that is to ensure that that consolidation is achieved to be able to create a conducive environment for sustainable growth to occur.
And almost finally, in your assessment, would you say that Nigeria is getting to that point where we start gaining that level of investor confidence like we used to have? I still see more of FPIs coming in, and many are expecting the big ones, the FDIs, them coming and all. You've been to so many international forums, even the central bank governor, and is also doing that job of trying to woo Nigerians. How are woo foreigners, international players? How well are we doing around that space?
Yes, so we are aware that there's need to do more in the area of FDIs. Yes. So again, that has to do with creating the policy environment. And this is where the central bank and the fiscal authorities are also talking, trying to ensure that we're able to do more exports, we're able to diversify the economy, to be able to bring in the required investors, especially investment through the foreign direct, window. So it's an area that we need to work more. But let me tell you that apart from FPIs, there is this window that the bank is working so much, leveraging its own capacity, and that is diaspora remittances. That is one area of inflow that you can depend upon. It's not part of the FPI that can be reversed, So you don't have sudden outflow. And we have a huge chunk of Nigerian population abroad that we can leverage on them. And that is happening very, very fast. If you look at the numbers, they have increased tremendously since the present management of the central bank came into authority. And that has helped to stabilize even the foreign exchange liquidity you are witnessing now.
A lot of work set out for you, I must say.
Yeah.
It's really a busy time
For
at the Apex Bank.
Yes.
I know.
Yeah.
And as we prepare for data and prepare for the next meeting, well, let's see how it goes. We'll keep a tab always, as always, with you. Thank you so much for educating us more and letting us understand all of the fundamentals surrounding that very important decision taken on Tuesday. I've been speaking to Dr. Victor Obo. He is the director at the Monetary Policy Department of the Central Bank of Nigeria. Thank you so much and have a great weekend. It's a Friday.
Thank you, Tolu, and it's always a pleasure meeting you.
Thank you very much.
Thank you very much.
Thank you.